Well, hey everybody. Happy Aloha Friday. Adrian, who do we have here today?
We have the one and only Jodie Tanga, our mortgage genius from Pacific Rim Mortgage. I just want to welcome you back. We're so excited to be talking with you, and especially during this time in our ever-changing real estate markets.
Yeah.
Yep.
So, Jody, what I know about you, you're born and raised here. What you went? You went to go play soccer at University of San Francisco?
Yep.
Got a degree in I think finance or
Financial economics.
financial economics. Came home, decided to get into this business. You brought your brother on board, and as we say, the rest is
And
history.
sister,
And sister,
it's
it's
a
all
whole
in the
family
Ohana.
business.
Yeah. Real quick for our listeners out there that are in business or thinking about getting in business with family, what's the good thing about it? What's the challenging thing about it?
The good thing about it is definitely innate trust factor.
Yeah.
The difficulty is, when there are disagreements in anything really, in big decisions and small decisions, in process related decisions, because we can, we're siblings, so we
Yeah.
can really disagree on the most organic level versus if it's even if it's a partner, you're still weren't born and raised together and you have been there and done that, right? So even with a partner, it's still more professional, less raw. And so there is a lot that you have to be able to listen. You have to be able to agree and come to an agreement. And then you also have to be able to let go of the past.
Yeah, good advice. Adrian and I were both laughing because even though we weren't born and raised with each other, we do get raw sometimes, and we're business partners. But I think the key to it is that at the end of the day, I think of Adrian, just like family. At the end of the day, you can't get rid of your family. You're with them, and you get it worked out in the end. That's all. You always got to get it worked out, right? So
Yeah.
awesome. Let's talk about Adrian. What's the first question we got for Jody?
Yeah, so I said, speaking of getting things worked out, let's talk about some of these new products that are popping back up here in the market to make things a little easier for certain types of buyers.
So there definitely is the reintroduction of the adjustable rate mortgage, and I have not done very many of them, but that's not to say that as long as it's utilized responsibly with full disclosure and explanation and education, that it's not a good tool. So what I mean by that is being able to get a lower interest rate which equates to a lower monthly payment, which equates to a higher purchasing power for a fixed period of time. And so whether it be a 3-year arm, a 5-year arm, a 7-year arm, a 10-year arm, meaning it's fixed with no concerns of any changes until that fixed period ends. So for that, that's one of the best ways to be able to maintain a price point and maintain a monthly payment budget without having to worry too much about the increase in interest rates. But then that is, a medium term option. So it's we have to understand the exit strategy, which is going to be based on historical evidence and data. The rates will come back down. And when they do, that's when you capitalize and get yourself into a 30-year or a 20-year or 15-year fixed rate.
Well, I mean, here's a question for you, Jody. Do you ever see the interest rates? Do you in your wildest dreams or nightmares, do you imagine the interest rates getting to 18%?
No.
No. And the reason why I mentioned that, in 1983, they're about 18 point something percent. So I want to give everybody context. 6%, You know, it is what it is, and we have, like what Jody's proposing, game plans and stuff like that. But don't be discouraged with the 6% interest just because maybe it was 2%, 2 to 3%, a couple months, 6, 12 months ago. Realize that it's still, I look at, you talk about the exit strategy, right? 20 years from now, the house is going to be worth more money. And we always tell our clients, if it's not, we'll buy it back at your original price.
The other thing is that not everyone is holding on to their home for 30 years. They're
Yeah.
typically either, right sizing, whether buying a bigger home or a smaller home
Mhm.
after a certain
Yeah.
amount of time. So that can also play into this adjustable rate mortgage strategy to keep those monthly payments down.
Yeah. I think too, Jody, would you recommend, like, let's say the payment is less, um, but then if you got into a fixed, it would be more. Should they still be saving that difference?
So that's a great question, and there's no one cookie cutter answer because it depends
Yeah.
on how much longer they intend on owning the property.
Gotcha.
If they're like, no, we feel like this is going to be our home for at least 10 more years, there is something to be said about taking advantage of the current rate, even though it might get you a little bit higher, because it's removing the potential for any volatility. So we know what it's going to be. You might be paying $100 more a month, but it's not going to become 200 more a month. It's not going to become 300 more a month. But if it's like, oh no, we're thinking about selling in 24 months,
Yeah.
depending on the economic environment, I might be like, no way, it's definitely not worth it to refinance. Let's ride the
Yeah.
wave. Yes, you are in an adjustable period, but it's only going to adjust 2 more times before you sell.
And I would be a conservative. I'll be the conservative uncle and tell you guys, save your money, because if you had 2 grand, 4 grand, 6 grand, 10 grand sitting in a savings account, that certainly doesn't hurt when these emergencies come up. Like weekend trip to Vegas. No, that's not an emergency. But the car breaks, and then that's when people, when they don't have that cushion, they start putting on consumer debt and getting in trouble. What else, Adrian?
So we talked a little bit about some new, well, not new products, but old products that are maybe coming back.
Yeah.
So let's talk about the different kinds of loans that Pacific Rim Mortgage can help with or specializes in. I have it there on the banner, but let's go through that.
Yeah, left to right.
So there's the VA loan, which of course you do have to be VA eligible. And the beauty of that loan is getting the lowest interest rates with 0 down and no private mortgage insurance monthly. There's the conventional loan, which is open to all buyers, all areas of the island and statewide. It does require at least a 3 to 5% down payment, depending on if you're a first-time home buyer or not. And there's not. It would go with any type of property, so single-family home, condo. It does get unique when you guys start to be interested in a property that's available for short-term rentals, not really a conventional option, or if you're hoping to buy a condotel or even a studio that is a hotel room in Waikiki. That's not conventional financing.
Okay.
FHA is going to be for a higher debt to income ratio type of buyer, or possibly a lower FICO score buyer. And that's going to be for all property types, all locations. And the USDA loan is going to be location specific. And that would be Eva, Beach, and West, and then Hui, Manu, and North. So that is 0 down, and it does have a required income limit. So you need to make less than a certain amount of money depending on your household size. And that is great, because it does offer a 0 down option for even if you're not VA eligible, but it it does have its location requirements and income requirements.
So here's what we do know, Adrian. Good students do what?
Takes notes.
They take notes. So let's see if I was a good student. DA eligible. Let's review. You got to be eligible, low interest rate, no money down. Am I correct?
Correct.
Did I hear you correctly? Okay, let's check my next notes. Conventional, 3 to 5% down any property, no vacation or rental or condo tells. Okay, FHA for 300. Higher debt to income, lower credit score.
Yep.
Okay, and finally, I'm going to go for the double bonus Jeopardy question for today, USDA. Location specific, zero down, income limits.
And I just had a question on the location specific. We've been hearing for years now that they are going to take a look at the census, and some areas may not qualify. Has there been any more like talk of that or anything that on
It's
the
like
horizon?
every
or
10 years, right?
safe
Yeah.
still?
Yeah, every 10 years.
Every 10 years, and the latest update is Eva Beach and Kapolei are still in the mix for USDA.
We still got Farmer John. You know, we got because it was for farms, right? It was like a building in agricultural
rural.
areas.
Yes.
But yeah, no, my neighbor get plenty of papaya trees, so maybe that's why we still qualify. But what else, Adrian?
So, Jodie, maybe you can share with our viewers a success story. I know that you guys are very creative and savvy with your problem solving skills. I mean, I personally have witnessed it on my own situation. But let's talk about maybe like a buyer specific one that you guys were able to figure out and get them into an awesome home and mortgage.
We have a recent success, which again, our ideal situation is that everyone just starts off with us and finishes off with us, and there's no unexpected stress and last minute scrambling. It's obviously that's more ideal. However, we are known for taking over files that have combusted at the hip and being able to come in, redirect, maybe a couple tweaks, a couple different angles, and then get it closed. And so one example is a very amazing family, nice chiropractor, seasoned, self-employed chiropractor. And he was 30 days into a 35-day transaction and found out that there was a glitch. And so we got the call, we assessed the situation, reviewed credit, which is necessary in order for any real information to be provided, looked at the different income sources, the way that it was produced on paper and illustrated, and then we came up with a solution. And it was, I think from the day we took over it until the day they got their keys, it was about 12 days. So it was a feel-good success, and the buyers were happy, seller's agent was happy, buyer's agent was happy, and that's what we want to do. We want to think and figure out solutions and get the mission completed.
Now, you know, I put it up there. Pre-approvals are gold. Let's talk about that. You know, you said, hey, if I give somebody a pre-approval, you know, stuff within the financing, your lane is 100% going to be square. Is going to go through. Talk about that. How do you do that?
So it's not anything magical. We're super detail oriented, and we do the heavy lifting up front. It's literally the best way to explain it. We do the heavy lifting up front. We ask the hard questions up front. We actually look at the documentation and require documentation and look at the historics. We do the 2-year look back up front instead of, oh, you're on salary, 100,000. Great. Yep, you qualify. You're pre-approved. You know, we're tell us about your employment history. What were you doing before? How long have you been with this job? How do you get paid? Oh, okay, wait. So there's actually a salary component and a commission component. Okay, that changes things. You know, we know the guidelines. We understand how the different loans, what works and what doesn't, and we are looking at the documentation and we're asking those questions. So people often say, well, the other guy didn't ask for that. I didn't need my 2020 tax returns from with the other guy. And I'm like, I know, believe me, I know. But guess what? You're going to need them, and they are going to need to be looked at. And the only way for me to be able to say, yes, you have a briefcase full of cash and you're closing when you get into escrow is if I get that stuff. And so it's just this battle.
It's, you know, analogies are a way to people to get the information to sink into people's heads. And it's like you get one quote from a painter, and you're a painter, and you give them the quote, and they go like, well, the other guy, he was half your price, and you know, he was only going to paint half my house. Well, hello, he's only painting half your house. That's why it's that. It's like, you know, you're a painter and you only paint half the house. You got to get all the paperwork. So the other thing, and that dovetails into, and Adrian, see if I can lead you to this, and if you can think about what I'm talking about here. What do I mean by Jodie helps sellers are also like our listings? How does she help them?
So on our listings, we like to have Jodie take a look at any offers and buyers that come through, just to make sure that they are truly, you know, credit worthy. Because if we open escrow with somebody and, you know, maybe like their particular lender did not go back to the 2020 taxes up front, and then they find out and we're halfway through escrow that, oh, whoops, you know, you actually don't qualify, you know, you're gonna have to wait another 6 months or a year or whatever, then it's terrible for the sellers, because then we got to go start over again. Yeah. So we like to know up front. Yes.
And what's the specific language we put in the listing to the agents?
That we request that the buyers do get a pre-approval with Pacific Rim Mortgage.
Yeah.
And, you know, we're not saying that they have to use them, but just
we're not saying required.
Have a conversation. And, you know, sometimes PacRim has a better rate or a different program that their particular lender did not offer to them. So sometimes it's actually a great thing that they go and they check.
And you know, Jodie, couple more questions. We have time for one or two more questions, but here's one for you: local versus mainland lenders. What are your thoughts?
I mean, there's so many concerns, and it doesn't always make sense, because mainland lenders could have easily been doing Hawaii underwriting for years, and they could really understand the collateral and the different way that we zone our properties and all that stuff. However, what I have learned is that is not what comes to fruition. So when there is a mainland lender, oftentimes, let alone the difficulty with the difference in hours. So, hey, it's Saturday, I need a pre-approval. Hey, it's only 4:00 Hawaii time, but it's 7:00 in the mainland, or even 10 or 12 midnight, you know, I need this pre-approval now. So that already is an issue, because our market is fast moving. You need to be able to get information. What are the monthly payments going to look like? What are today's rates? Can you lock me in? And can I get a pre-approval issued in real time? So there's that. However, once you get into the transaction, so after your agent has done an amazing job and gotten the offer accepted, and you've opened escrow, and now you're into underwriting, there's just so many hiccups with the properties and the appraisals. And that's where we take over a lot of mainland lender loans, because they hiccup on appraisals, and they really struggle with understanding our condos. They really struggle with really knowing the data, because I am closing these conventionally. So theoretically, they also should be able to close them conventionally.
Yeah.
Because theoretically, they have the same Fannie Mae guidelines. But what we're seeing in practicality versus theoretics is that they get a hard stop where we're like, no, I just closed on that project last week. Bring it over. I want to do the loan, you know?
Yeah. Adrian, one last question for Jodie before we wrap it up.
Well, is there anything that you wanted to touch on before we wrapped it up? I think we've covered quite a few things, but I know there's always more. There's so much more that we could talk to you about, but just one more topic and then we'll wrap things up with you, Jodie.
I would say one of our unique differentiating factors, which really matters, is that we care so much and that we're so passionate about what we do. And I know everyone can say that,
but not everyone can do that.
I just feel like when I'm talking to our mutual buyers, and we're so grateful of when we get a referral, and when we're talking to them, I feel like they kind of, once they get over I got to get all this documentation to her, they really feel like they're being educated. So they're really like, wow, I did talk to another lender before and they didn't tell me like what is escrow. They didn't tell me the purpose of the title insurance. They didn't tell me why this amount of taxes have to be collected up front. We didn't break down the multiple different interest rates and how that impacts my bottom line. They're like, you're really spending a lot of time explaining this one worksheet,
Yeah.
And I think
I was gonna say, I had a better analogy. You're like a trainer at the gym. The people will be like, well, my other trainer only made me do 2 push-ups, and Jodie makes me do 10 push-ups. And the push, you're not gonna make them do push-ups. No, maybe she make you do push-ups. No, she's not gonna make you do push-ups, but she's gonna make you do the paperwork. 2 pieces of paperwork, 10. And with that trainer, you may not like Jodie, or may not, you don't not like her personally, but just the situation. You may not like the instructions, but you want the results to be able to buy that home. So same thing like a trainer. Nobody's like, yeah, I really enjoy push-ups. There's a few crazy maniacs out there, and nobody's out there going, I really enjoy getting all my paperwork into you and looking up all my tax returns and my W-2s and filling out these forms. Nobody looks forward to that, but you got to do it. And so you're like the concerned auntie and or sister or cousin that's like, hey, calling them out, and you got to hand the paperwork in. Our stamp of approval, and we'll wrap it up with this. Adrian, you give a stamp of approval and I'll give a stamp of approval. Well, first of all, Adrian, do we let any old people become experts we trust on our website? No, it's resources, teamlally.com. You go over here, experts we trust. Adrian, on our experts we trust page, do we have like 5 lenders?
No, we've got just one.
And a lot of times people will say, oh, you should refer like 3 because if it goes sour, at least it doesn't come back on you. We went the other way. We said we're going to pick one that we know 100%. All my sisters, my family goes to Jodie, my dad, and that is where my own family plus all my family that are clients go. And I don't worry about like other 2 lenders or something coming back, because then I'll pick up the phone with Jodie and say, oh, we had this, we had that, and we get it worked out. What about you, Adrian? What's your stamp of approval?
Oh, they've helped me with multiple loans and issues, and I had some interesting situations that they were able to really work hard and solve that I thought that they were going to be impossible, but Jodie and Derek, they figured it out, and they used their resources and connections to push the refi through for me. So thank you.
And we took this video like 25 years ago, and Jodie has not changed at all. She's exactly the same. She must be part like Dracula or something. She's exactly the same. But it's you look the same and you look good because you're taking care of people and you sleep well at night.
That's right.
So thank you so much for that. Well, that's it, and we're going to say thanks and aloha with our video here as we say goodbye. Hold on a second as I hit the I'm gonna hit the play button.